Today is Tuesday, March the 17th. I am coming to you live from the Danforth, a much quieter Danforth, as you can see over my shoulder. Like much of the city, it's a little bit like a ghost town here. I wanted to do a quick video this morning just to address some of the common questions that I'm getting. There's a lot of information flying by. It's not even day to day at the moment, it's hour by hour, so the situation is constantly changing. But as of this morning, these are some of the common questions that I'm getting and some of the generic responses that I can give to you right now. So without further ado, we'll get into it. I think the biggest headline right now is regarding the drop to the prime rate. So the question is, what is happening with the prime rate and are we expecting further drops? So at the moment, as of last Friday the 13th, the Bank of Canada did an emergency meeting. They dropped the prime rate by another 50 basis points. Now you have to keep in mind that what the Bank of Canada affects when they have these meetings is the overnight rate that is used for lenders to basically fund money, to borrow money amongst themselves. It doesn't necessarily, it's not a guarantee that it transfers to us as the consumers. As of yesterday, everything was very quiet. At I think it was about 6 p.m. yesterday, the 6 major banks announced that they were going to drop the retail prime rate from 3.45% down to 2.95%. So that means if you have any credit facility that is based on prime, so a variable rate mortgage or a line of credit, student loan, all those interest rates are going to drop by 0.5%. In terms of what else can happen, that's a good question. I mean, there is the expectation by many observers that the bank will be forced to do another rate drop to follow step with what happened in the US. The Federal Reserve on Sunday dropped their prime rate to close to zero. And it may well be the case that the Bank of Canada will have to do that before the scheduled April 15th meeting. So something to pay attention to. Will that mean that if you're in a variable rate mortgage, your interest rate is going to drop further? I don't know. I don't know that that's necessarily going to be the case. We shouldn't take that for granted. Okay, so moving on to the next question here. Should I be locking in my variable rate mortgage? I think the answer on this one is a resounding no. If the trend for variable is downward, I don't know that you want to be locking in a fixed rate mortgage right now. What else can I say about this one? If you're in a variable with rates trending downward, I think stay put, no need to convert. Even though fixed rate mortgages may look attractive, I don't think you're going to be able to outperform locking into a fixed rate right now. Next question. Is now a good time to refinance my fixed rate mortgage? So this one is probably the biggest myth that's out there. There's a lot of misinformation or a lot of rhetoric that rates are dropping, refinance. I've seen that a number of times being communicated. But that may not necessarily be true. So 5-year fixed rate mortgages are around 2.5% at the moment. If we're going to generalize, there might be lower, there might be higher, depending on the nature of your transaction. But with fixed rates at that level, they match rates that have been available in the last 5 years. So most borrowers currently have their fixed rates below 3% anyway. So there is no real incentive to refinance right now into a lower rate because keep in mind, the penalty to break a fixed rate mortgage is the interest rate differential, or IRD. And that penalty basically takes into account the current rate that you're paying your lender. So let's say you're paying 2.99% or 3%, let's call it. Current rate is 2.5%. There's a 50% spread or 50 basis point difference between those two rates. And the penalty is going to be based on that spread. So anything you end up saving by getting a lower rate, you're going to end up paying in the penalties. So It's not necessarily the case that for every single mortgage, because the rate is lower, you should be refinancing. There are some exceptions. If you have rates that are over 3%, it might be interesting to take a look at. And if you do want to do a refinance, here's the information that you need. You need to call your lender to find out, number one, can you break your mortgage? There are a lot of mortgages out there that cannot be broken to be refinanced, so pay attention to that. Number two, you want to find out what your penalty is. So definitely get that number. And then number three, you want to know what the maturity date and the exact balance of your mortgage is today. With those three basic pieces of information, we can run an analysis and determine whether it's worthwhile to convert or refinance your fixed rate mortgage. Another question, are fixed rates going down because the Bank of Canada has lowered rates? This one is definitely a myth. And at the time of doing this video, we are seeing the trend for fixed rate mortgages actually to be increasing. We are speculating that lenders are concerned about their exposure to housing debt and are not trying to encourage borrowers to borrow more money to pursue refinances. They want to keep status quo and not incentivize people to take on more debt during these very uncomfortable times, and I think there's concern about what is to come in the future. Oh, look at that little doggy up there. The last question is perhaps the most serious one. Obviously, offices are being shut down, businesses are slowing, income inevitably is going to slow down, and that's going to have an effect on people's ability to make their mortgage payments. So many lenders are offering the ability to skip a payment. In fact, many mortgages actually have that feature built into it. So I would recommend that if you are concerned about your ability to keep up with your mortgage payments, communicate with your lender, find out what options there are. In most cases, what they'll do is they'll just take those payments and capitalize them. So they just add the missed interest expense to the outstanding balance of the mortgage, and it just gets, the can gets kicked down the road a little bit further. So that's definitely an option that's available to you. And if you have major concerns, all lenders on their websites are already communicating to borrowers that they are willing and able to do this. There is also talk from CMHC and the other mortgage insurers that if you have an insured mortgage, they will support you during these difficult times. So there is support there. I think everybody's taking a wait and see approach to see how bad this gets. But if you have any additional questions that I haven't addressed in this video, I invite you to write them in the comment section below. I'm happy to address them for you. And if you have any personal questions that you want to ask me, by all means, book an appointment on my app. You can find it on my website. I'll share a link as well. And we'll take it one day at a time or 1 hour at a time. So from the Danforth, I'm signing off. Thanks for your attention. Thanks for your time. And we'll get through this. This too shall pass. And it'll all be forgotten one day. We'll say, oh, gosh, do you remember? Did we live through that? But hopefully it can't come soon enough. Bye for now.